Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, September the 26th, the year's 2023. Let's talk trading. Trading stories we tell ourselves. Fibonacci with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal. Walmal, did you ever watch that video of, I think it was called Pi? And this one guy was going crazy because he was looking for these numbers.
No, I don't think I have, but
Yeah,
I can imagine. Yeah, how
yeah,
difficult it would be.
yeah. Well, it's just that, there's some traders out there that are always looking for these magic numbers, whether it's, how many periods to put in the RSI or the ATR, or how many, what numbers to use with MACD or stochastics. But bottom line is there's no magic numbers.
Yeah,
But it's definitely a story we tell ourselves. And in fact, I am kicking myself because there's a story that I tell. Right now I've got the TRO Dynamic Fibs SR indicator up, and the one thing, when you come in the inputs, I've changed I periods to 34. That matches the 3 ball on the 3-level ZZ indicator, which is another story we tell ourselves. But and we'll talk about that tomorrow. Now that 34 isn't a magic number; it's just to match or mimic what the 3-level ZZ indicator is doing. And so right here we have the this 3-ball would appear up here at 121.93, and a 3-ball would have appeared down here at 121.69.5. And what happens is price usually when it puts in a 3-ball, it'll retrace back to the 50% level, which in this case would have been 21.81 or better. Now, if it puts a 3-ball, if it comes down to the bottom, then it retraces to the top. And when you have this indicator up there and you can see how many times it happens, it's a story that you really start to believe in. It can get you in trouble if you're a little anxious or too quick on the trigger. But if not, you can make some nice pips, and sometimes it might only come, do a 23% pullback. Now I don't have the percentage numbers written here, but if you bring up the gauge, it'll tell you exactly what fib level you're at. And I always go 0 at the bottom, 100 at the top, like a thermometer, even though a lot of people will sometimes make this 0 and then this 100, which is quote unquote the proper way. But if anybody knows me, I don't do anything the proper way for the most part. Not, I find my own way. It gets me in trouble sometimes, but that's just me. So Walmal, have you used these Fibonacci numbers in your trading?
I have. And actually, I'm going to step back and talk about two different things first, and then we'll talk about using them. But you said using it, you go and do it slightly different. I think that's an extremely important thing to really concentrate on. And that is, no matter what methods you're using, no matter what indicators you're using, it is you who is using it. It's not, some mathematician off in an ivory tower someplace that's using it. No, it's you. So you need to go and use it in a way that makes sense to you. I mean, what good is it having a hammer? Let's face it, you got a hammer. The proper way to use it is to go and hold it 3/4 of the way down the handle. Well, what if you got small hands? What if you don't have very much arm strength? Well, you better not do it that way, because you're going to go and hit the wrong place, because you're not going to have control of that hammer. And the same thing we can say about this. If it makes you more comfortable to always be measuring from the bottom to top, then measure bottom to top. Use what you can go and see and do, and use the tool in such a way that you're able to use it, in a way that's efficient for you. So that's what I say to all those people that would poo-poo that idea. It's just, it's just crazy not to go and do that. The second thing is, Fibonacci, where did it come from? And you think, Fibonacci, it's funny because, he was I believe, a 12th century mathematician out of Italy, Leonardo Fibonacci, but he come up with this, or at least he's credited coming up with this. But the funny thing is that Fibonacci sequences and numbers existed in Italy back to the 6th century. So it goes much, much further back. And you say, well, where did these numbers come from? And I think that's an important part of the story. And these numbers come from what, at least when Fibonacci, when he was doing it, what he was trying to do was use these numbers in such a way for rabbit farmers, trying to figure out what their maximum load would be. In other words, the old expression that they breed like rabbits. Well, how can you go and actually figure out how many rabbits you're going to have at the end of the year if you're breeding rabbits and you're not culling rabbits out? That's what he used it for. And it was just a very, very good way, a good indicator for going and doing it. And what wound up going and being very, very accurate. We see it in art. We see, you look at some of the art from the Middle Ages, a lot of it is based on, if you look at the artists themselves didn't know anything about mathematics, but a lot of the themes that are within it, within the color schemes and palettes, are actually, you're able to go and find it. If you look out into nature and you look at the way leaves are formed and the way the veins of the leaves are, you find, again, the Fibonacci, numbers there. So that's why this number, you used it, you said that term, there are no magical numbers. Well, people start looking at something like Fibonacci as being something magical. Why? Because you see it in nature, you see it in people's natural inclination. So, well, if it's there, then it's got to be there. So what do? People then start saying, okay, well, I'm a trader, I'm going to start applying this to trading. And why? Because when we look at the chart, what do we see? We see, I don't want to be an Elliott waveform guy right now because that's another story. But what we see on the charts is waves that go throughout the chart. In other words, price goes up, price goes down, price goes up, price goes down, and that seems to happen in a pretty, natural, harmonic way of doing it. And the Fibonacci numbers seem to mimic it pretty well, and because of that, people start to go and develop methods to go and take advantage of that. Well, this all seemed to work really nice and fair and even until probably the 1990s. And then what happened was the big banks said, aha, we got all these retailers going out there and following these Fibonacci numbers, and we can go and figure out, oh, they're going to put buys on here. They're going to put sells on here. They're going to be, putting their stops over here, and they started running them. So in the old days, we'd always look at, the 38.6 and the 50 and the 618, numbers, and that's where we place things. Well, the banks started, figuring those levels out, and then they started going and attacking those levels to make money. So then people started moving the latest thing now is to move your levels not to the 38650 and 618, but now you're moving it to the 214 and 7816 because apparently it breaks the bank's algorithms. I don't know if it's true or not, but that's the story that people tell themselves, and they claim that they can make money by doing that. Again, it's a story, and if you're able to make money on the story, make money on the story. What I like to do is, if I use Fibonacci's, and I think, Kira, I think I said this to you not too long ago, that I don't have it on my chart because I can see it naturally. And part of it was because I traded Fibonacci for so long that I just, it's sort of like you know where a 3 ball is, you know where a 1 ball is, where a 2 ball is. You don't even have to go and put the indicator up. You just naturally see it, or you naturally see an inside bar or an outside bar. Why? Because you traded so long and you have the indicators help you do it, but you don't really need it. Well, I can do the same thing with the Fibonacci. I can look at it and say, okay, here we are. We're sitting right now at for the retrace, we're sitting right now at about, 60% retrace, from top to bottom, on a 5-minute chart anyway. But, it just becomes second nature to going and doing that. And so how do I use it? I use it from the perspective of, hey, look at how much movement we've had, and we're getting next to a level that I know that the market tends to go and have problems at. Again, I used it yesterday. Used the expression, the danger zone. If you remember the old TV station, the old TV series, danger, danger, Robinson, danger, danger.
That was Lost in Space.
Yeah, exactly. And the robots, waving his arms in the air as best as he could. But in any case, that's what I tend to do. If I'm getting, next to an area, that's a problem, I just go and say, hey, that's a problem area. I want to get out here, or I don't want to get into a trade because I'm trading into that area. That's what I do with it. I don't know if Fibonacci's really work or don't work on a chart. What I do know is that when we get into those areas, there are so many traders who believe they work, and there's so much stuff that's out there, or so many traders out there making decisions at that point, it creates a chaos at that point. So
yeah, well, I was going to say, I think to tag on to that is when, since there's so many traders that believe it, it makes it come true.
Yeah, exactly right.
Almost self-fulfilling.
Exactly. Believe it till it's true, right? Or the other one, fake it till you make it. And I think that's what happens. So, and it's very similar to the story we were talking about yesterday with support and resistance. Again, I don't know if it's true, the basis of it, if it's true or not. But what I do know is that in those support and resistance areas, traders are making decisions. And because they're making decisions, it creates chaos in that area. I don't want to be in an area of chaos. I want to be in an area where it moves in a particular direction. Okay, so it's moving out of chaos into a nice, calm direction that I want it to go into, or I'd like it to go into, is probably a better way of saying it, into another chaos area. So I'm going to go and trade once I'm out of chaos, and I'm going to get out before I get into the next area of chaos. And that's how I use it. That's my story.
And you're sticking to it?
I am sticking to it. And that's the thing too, is, yesterday, I didn't mention this, I wanted to, but I think we ran out a little bit of time. But, if I was to put support and resistance lines on the chart, and I know, Tiro, you can go and attest to this because I've done this for a while, and that is that I do not put a line on the chart and say my support line is at, is at 2170. I don't I don't do that. I go and say my support line is somewhere between, notice that word, somewhere between 2165 and 2173. That's my support area. And I go, if I was to go and draw support and resistance on the chart, I wouldn't draw a line in the sand there. I'd put a rectangle box there and color it in, because that's an area, because, price moves, and because price has momentum, it can, let's say it's moving down and it hits that support area. Okay. That momentum, if the momentum is pretty strong, it's going to penetrate. Theoretically, people are probably saying that supports at 2170, and they'll draw the line there. The problem with drawing a line there is that if you got a lot of momentum coming down, it's going to overshoot it. And so it really actually put in a low somewhere around 65, 67. Well, or the other thing is, if my momentum going down happens to be kind of slow, and it's tapering off, maybe it doesn't even get down to 70. Maybe it only gets down to 73 or 75. So I'm going to paint a box there and say, this is the entire area where it may run into problems. Well, with Fibonacci's, I kind of do the same idea, and that is that, I don't write a line at 61.8. I'll go and actually look at it and say, it's somewhere between, 60% and somewhere and 63 or 64%. And again, draw a box there. I draw lines from when I take a trade, but I don't draw lines when I'm looking at areas where there may be chaos.
Yeah, and you know what? The fastest 15 minutes of trading is over. But the one thing about the fibs is you can see, just picking these lines here, having the indicator plot them, or these diamonds, you can see how many times price will, crisscross or bounce off of those areas. So, fellow traders, remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.